Hey everyone, me Kevin here. So a couple crazy things happened in the last 24 hours that we should talk about regarding Bitcoin. The first has to do with the Fed, and the second has to do with Cathie Wood over at ARK Invest. So the first is the Fed. So yesterday, the Fed's exchange system for both ACH deposits and transfers with bank accounts and the Fed's wire service went down for somewhere around 3 hours. Which is really bad because a lot of companies and a lot of businesses send wires and ACH transfers that need to go through on a particular day. And when things get delayed by a few hours, a lot of companies and businesses end up missing cutoff times, and boom, you end up not only losing a lot of trust in the financial system, but you end up with disasters from the point of view of accounting and trying to solve late fees or other issues. Now, yesterday was the 24th, so it's not like it was like the 1st of the month or the 15th of the month. But still, it's not good for the Fed's clearing system to go down because usually and I'm oversimplifying here, but usually if I go into, let's say, JP Morgan Chase right now, and I go in to do an online wire transfer to you, let's say, and I want to transfer you $1,000, I put your information in, your name and your address and $1,000 and your bank account number and your routing number. I hit send on that. That goes to the Fed first. An analogy that a lot of people use is kind of think about this like when you go into the United States after traveling from abroad, you get routed to customs first. Like my wire doesn't directly go to you. It goes to sort of this customs agent first. And they're kind of behind that glass like, is this suspicious here? It kind of explains why every single time I try to wire money to a Bitcoin service like BlockFi, which you can get $250 with if you open an account with BlockFi by going to metkevin.com/BF. Anyway, kind of explains every time I want to wire money there, the customs people are like, wiring money to cryptocurrency, delayed. Yeah, it's like really annoying. And they always push me in for additional review when I wire money to something like a cryptocurrency service. But anyway, the system, the suits don't really love the Bitcoins yet. But anyway, usually they check and then eventually they're like, okay, we'll approve this. Stamp and the wire goes through. Once they do that sort of approval, the wires can be virtually instantaneous. They're pretty freaking fast. Like when I wire money to something I've wired money to dozens of times before, like Fidelity because I'm closing a real estate deal, I send wire. Oftentimes I'll send an email after that going, I just sent you a wire. And like within 5 minutes, I get an email back going, oh, we already got your wire. Like, I feel like a lot of those approvals are just super automated. They happen fast. The system often works really well. But yesterday, the system collapsed for a total of 3 hours. Like the Fed's banking system collapsed really bad. But it's really bad for the Fed. It's really good for, again, blockchain and the cryptos. And this is what brings up Cathie Wood. See, first of all, the more of these disasters that we have, like Robinhood's 2-day clearing process, that'll eventually go to blockchain. We won't have those issues. The more we have issues with ACHs and wire, and this is, oh, by the way, let me make this clear, like this wire issue that came up, really rare. Supposedly really rare. That's what we heard at Robinhood too, that this is like a really rare occurrence. Like, how can we plan for this? But these really rare issues keep coming up. Anyway, this brings up Cathie Wood. So Cathie Wood this morning in an interview talked about how Bitcoin should be worth trillions of dollars and that we could easily see Bitcoin blow up in value. She's obviously in her firm, they're very bullish on seeing Bitcoin potentially extend a rally to over $400,000. They believe that in the future, we're going to see more and more firms adopt cryptocurrency as a treasury, which is just a way of saying rather than keeping money in cash or US bonds, like treasury bonds, basically money that you have that you can quickly convert into cash. The more we see that transition to Bitcoin, the more likely it is that there'll be more demand for Bitcoin and the higher the Bitcoin or price of Bitcoin goes. Now, but that's not the only thing she said. Cathie Wood also dropped a little bit of to me, this is a big call here. I don't know how much I agree with this happening, but it's a big call. Cathie Wood thinks that Bitcoin might take the place of the new 60-40. So 60-40 is a reference, and it's not one that I've ever followed, but it's a reference to having 60% of your money in stocks and 40% of your money in bonds. Sometimes people do this age-based, so they'll say, okay, take your age minus 100, or take 100 minus your age and put that much into stocks. So for example, if you're 30 years old or you're 20 years old, you take 100 minus your age. So if you're 20, you do minus 20. And that means you go 20% bonds and 80% stocks. Or if you're 50, you go 50-50 with bonds and stocks. Some people use that age-based split. Some people use the 60-40 split. 60% stocks, 40% bonds. And see, it's important to know too that Cathie Wood is a bear when it comes to bonds. She's really anti bonds right now because she thinks the prices on existing bonds are going to collapse. In other words, she thinks rates are going to go up, which is another reason she's bullish on Bitcoin. But anyway, she thinks people might replace bonds in a 60-40 portfolio with Bitcoin. If that happens, yeah, Bitcoin is not only going to go to the moon, but is going to exceed her expectations of the moon. It'll be nuts. So really exciting. A lot of good news here in terms of Bitcoin. And again, the more we see our existing banking infrastructure crumble or come under stress or strain, like we saw with Robinhood or the Fed yesterday, the more Bitcoin goes mainstream. It's crazy. Personally, I don't ever think that Bitcoin is going to replace the dollar. I think we're always going to have some form of a fiat. Maybe it'll be a token in the future, but it'll always be some form of a fiat. But people's desire to invest in Bitcoin could continue to go up on these sorts of fears, especially if we see inflation trends continue to trickle up, which we did see. Federal Reserve board member Bullard this morning mentioned that he believes inflation is definitely coming later this year, which is kind of the opposite of what Jerome Powell thinks. Jerome Powell thinks, yeah, we'll see spikes of inflation, but that'll subside over time. So we've really got a lot of sort of tenuousness in like, are we going to see inflation? Are we not going to see inflation? From Cathie Wood's perspective, doesn't matter. Bitcoin is absolutely here to stay. Oh, in fact, an update just came up from a Bullard, and he actually says that we do not have to be worried about 1970s style inflation when we had like 10 to 15% inflation. And he does say that he thinks we'll get to a jobless rate of 4.5% by the end of the year, and that this rise in treasury yields that we're seeing is actually a good sign for a market recovery. But again, that could also pressure rates, mortgage rates going up, hurts real estate, and gets people more excited about cryptocurrencies. So I wouldn't be shocked for us to see Bitcoin over 100K, at some point within even the next few months. I'm not going heavy on that bet, but it just wouldn't shock me. So anyway, I would say all of this here, bullish news on Bitcoin. Keep in mind, if you were to go 60-40 Bitcoin stocks, Bitcoin right now tends to trace with stocks. Like when stocks go down, Bitcoin tends to go down. So be careful with that, because the purpose of the original 60-40 split was that if stocks do well, bonds might not be doing well, but if bonds do well, stocks might not be doing well. So you'd have that sort of seesaw. If you put everything on Bitcoin and stocks, you're kind of on the same rocket ship to the moon. All right, folks, thanks so much for watching. We'll see you in the next one.